Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths behind financial statements. And today we're diving into TeraWulf Inc. Its latest filing. Get ready, because this report is all about a massive money move that could reshape their future. Before we dive in, if you love getting these straightforward analyses, make sure you're subscribed. And hey, we've got a fantastic community Discord server linked in the description below, so come join the conversation. So, what is the big news? TeraWulf Incorporated, a company focused on generating power for Bitcoin mining, has just announced a huge debt offering. They're raising a massive $3.2 billion through senior secured notes. That is a colossal amount of money, and it tells us a lot about where they're trying to steer the ship. Now, TeraWulf itself isn't directly issuing these notes. Instead, it is their wholly owned indirect subsidiary, Wolf Compute LLC, that is making this financial play. This is pretty common in corporate structures to isolate risk or facilitate deals, but it is worth noting that the ultimate responsibility and the ultimate benefit will flow back to the parent company, TeraWulf Incorporated. Let's break down what these notes actually mean. They essentially loans that the company promises to pay back with interest over a specific period. In this case, they offering a 7.750% interest rate, and the debt is due in 2030. This means they borrowed a lot of money, and they committed to paying it back with a fixed interest rate over the next several years. The senior secured part is important too. Senior means these lenders get paid back before other, less secured debts if things go south. Secured means there is collateral, assets the company owns, used as a guarantee for the loan. And get this, they're selling these notes at an issue price of 100%. This means for every dollar of the loan's face value, they're getting exactly $1. In the world of debt offerings, this is a clean deal, suggesting strong investor confidence or favorable market conditions for TeraWulf Incorporated right now. The offering is expected to wrap up on October 23rd, assuming all goes according to plan and market conditions remain stable. Who are they selling these to? The filing explicitly states these notes will only be sold to qualified institutional buyers in reliance on Rule 144A. Think of these as the big players in the financial world, like large investment funds and insurance companies. They sophisticated investors who understand the risks involved. This isn't something grandma is buying at her local bank. This is institutional money, and it signals that this is a significant financial transaction for large-scale investors. It is interesting to look at where TeraWulf Incorporated is generally listed. Their common stock is traded on the Nasdaq Capital Market under the ticker symbol WOLF. This is where most everyday investors interact with the company's stock, but this debt offering is happening at a different level with different types of investors. Looking at the signatures, we see Patrick A. Fleury, the Chief Financial Officer, signing off on this report. This makes sense as managing the company's finances, especially large debt issuances, falls under the CFO's purview. Now let's put on our Warren Buffett hat and decode what this really means. Raising $3.2 billion in debt is a massive undertaking. It indicates TeraWulf Incorporated has ambitious plans, likely involving expansion of their data center operations or possibly acquiring new assets to fuel their Bitcoin mining endeavors. This is capital intensive, and they need deep pockets to grow. From a business strategy standpoint, this large debt load signals a strong belief in their future growth prospects and their ability to generate enough cash flow to service this new debt. They're betting on continued demand for Bitcoin mining operations and the profitability of their infrastructure. However, it also significantly increases their financial leverage. More debt means higher interest payments, which can eat into profits, especially if their revenue streams become unpredictable, which is a real risk in the volatile cryptocurrency market. So, what is the story here? TeraWulf Incorporated is aggressively expanding, and they're using a massive debt financing to fuel that growth. This shows confidence, but it also comes with the inherent risks of high leverage. The company is essentially borrowing heavily against its future earnings. The success of this strategy will hinge on their ability to maintain profitable operations, especially given the cyclical nature of Bitcoin prices and the ever-evolving energy landscape for mining. They need to ensure that the returns from their expanded operations will comfortably outstrip the substantial interest payments they'll be making for years to come. What is my take on this? It is a bold move. If TeraWulf Incorporated can successfully execute its expansion plans and the cryptocurrency market remains favorable, this debt financing could be a critical catalyst for significant growth. However, the substantial debt burden presents a considerable risk. A downturn in Bitcoin prices or unexpected operational challenges could put a serious strain on their ability to meet their financial obligations. It's a high-stakes gamble, and investors will be watching closely to see if this massive influx of capital translates into sustainable profitability. For now, it's a sign of aggressive ambition, but also a heavy weight of responsibility. Alright, that is our deep dive into TeraWulf Incorporated filing. What do you think about this massive debt offering? Is it a smart move for growth or a risky bet? Let me know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more corporate breakdowns. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and I'll see you in the next one.